Going forward with some of the earnings reactions that we are getting in, Transrail Lighting is on the radar. The company reported strong revenue growth for the second quarter. Remember, the company just recently listed. These numbers are not third quarter, but second quarter numbers. We have Mr. Randeep Narang, MD and CEO of Transrail Lighting, joining in to take some questions. Mr. Narang, thanks for being with us. I'll just look at the broad numbers and we'll get them up on the screen for our viewers as well. You have managed to see about an 11.5% revenue growth. Margins are steady with an upward bias. Margins are now almost touching 13% and your profit is up almost 19 to 20% as well. But before we talk about the numbers, something that's baffling is that you've just done an IPO in which there was, I think, 400 crores came to the company. But yet you're doing a Capex plan of 326 crores for which you will be taking on more debt. Why is that?
Suman, that's it. Firstly, thank you for having me over. So we are, part of the IPO was to look at around 90 to 100 crores of Capex, which was part of the plan. And with the current order book, we need a lot of tools and plans for us to look at execution of these. And this Capex is a 3-year principal approval. It's not going to be spent immediately. And this is phase 1, what we had planned in the IPO. And phase 2 will happen subsequently after a year, year and a half. So there is no hurry for us to implement, but as a principle, a board approval is required to start work. And that's what has been done yesterday.
So can you just tell us that now this 326 crores, I think this is entirely debt. You had raised about 400 crores in the IPO. So give us a balance sheet update. What is the debt equity now? How much will you look at increasing your gearing? Just give us a sense on the Capex and how you're funding
part it. Part of it is, this 326 is not a new Capex. Part of it is already approved as part of the IPO. So that is already around 90 to 100 crores is already there, which is part of our pre-planning, which is already work in progress for our brownfield expansion of our current plants. Subsequently, we plan going forward to look at a new plan based on our current order book. And this will happen not in this financial year, it will happen in 26-27. So principally, we are not in a hurry to use Capex right now. It's more of a principal approval from the board, which we're going to take forward in the subsequent 2 years.
What is the debt equity right now and how much can it go up?
Ma'am, the debt equity ratio currently is not going to go up dramatically. It's going to be at the current levels, because we are in no hurry to increase our debt and it's going to be in a phased manner.
So the number, please, if you could give the number.
Number, I'll have to check with my CFO and give that to you right now.
Okay.
All right. Yeah, so I mean, as he gives it to you, we'll get an update out there. But good to see you in, sir. Give us a few more details then. Could you tell us what is your updated order book? These numbers are as of Q2, but an updated order book as of now, point number 1. And what kind of order inflow are you looking at for FY25?
Okay. So the H1, we have got orders worth 2,200 odd crores with a L1 of 3,400. So this L1 of 3,400, we hope to fructify in the next 3 months. Other than that, we are further bidding for jobs in domestic and international. And this percentage of order intake should go up as we have planned. So we have 2,200 in the bag. Overall, our current order book today, what we are executing is 10,300 and with the 3,400 crores of L1.
Right. But 10,300 is as of Q2, right? Now we're already past Q3, we're in Q4. So could you give us an updated number? How much higher will it be?
So we are, as I said, we are bidding. We bid jobs worth around 30,000 crores so far. Waiting
what results. Is your 30,000 crores is what you bid for?
Yeah, in the last 4 months. And we are waiting results both for domestic, international, all our verticals.
And what is normally your strike rate?
A strike rate normally is 8 to 10%.
So around 3,000 crores odd is what of inflow we could further expect, right?
That could be an inference, yes.
And for the year, what kind of an inflow will we look at? 2,000 crores in the first half of the year, 2,200, I think so you said, and another 3,000 crores. So ballpark around 5 to 6,000 crores should be expected for FY25, or will it be higher?
So that's the trend. We've been clocking around 6,000 crores 2 years ago and 5,000 last year. So that's the trend we will maintain and better.
Sir, just talking about now margins and the contribution of your international business. I remember when we spoke to you just around the listing time, you had mentioned that the international business is the higher margin business for you. But I believe in the second quarter, execution has been really slow in the international business. Why is that? Do you expect to pick up? And if things remain like this, then is your margin at risk? Your margin right now is about 12.9% as of the second quarter. Just give us a full year trajectory as well for the margins.
So, ma'am, if you remember, last year we clocked 11.77% EBITDA. And we had given a guidance that we'll be bettering this around 12%. So we are ahead of the curve a little bit. Now, predominantly quarter two in India and internationally, because of the rains, there is a slowdown, which we see every year. But definitely H2, we will catch up from the point of view of execution. And we will continue in the same trajectory as we have promised in our RHP.
Okay, so sir, can you leave us with a guidance? Full year revenue growth FY25, what kind of growth do you see? And full year margins, exit margins FY25, where do you see yourself?
The full year profile, as I mentioned, was that we will grow around 30% year on year. So that is what the guidance still is maintained. Last year was 4,100 odd crores. And this year we'll be continuing with the same guidance. And on a margin profile, as I mentioned, we are looking at 11.77 going to 12 odd %. And if we can better it, we'll try our best. And to answer your previous question on our debt equity, we are at 0.53%, which we are looking at maintaining that for this financial year.
Okay, all right. We'll leave it on that note. Thank you very much for joining in and giving us some perspective on the business. That's Transrail Lighting at the end of their second quarter, not the third, second quarter. Company has recently listed. Stocks doing well in the pre-open. It's up 6%.